stocks. I want to start with the biggest winners and spend a little more time on the biggest winner because it's so important. Yes, number one in the S&P is Nvidia, and it was up nearly 50% for the quarter. Now, you know I love Nvidia, right? I mean, I love it so much that I named my dog after it, right? Now, just so you know, this is Nvidia the second. We lost Everest Nvidia. Jensen Huang was kind enough to let me have my dog be able to go in to headquarters. Now, why would you want to go into headquarters? Because this is a company with a hammerlock on artificial intelligence and graphics processors, and it's become our largest semiconductor company. Now, this is a stat that blew David Faber away, and he usually is kind of not interested in anything I have to say. Company has a $516 billion valuation, up from just $15 billion 5 years ago. I mean, that's incredible. Nvidia caught fire this quarter thanks to an amazing, just the last 3 months. Fantastic raise guidance, and the increasing likelihood that the regulators around the world will allow it to acquire a company called ARM Holdings, the British chipmaker that makes central processing units for both cell phones and personal computers. Remember, Nvidia makes graphic processors. Now, these are two areas where Nvidia has zero overlap, hence why I have said from the beginning that the deal will go through, but some people think I'm just parroting Jensen Huang. I wish I could parrot Jensen Huang. Okay, this weekend, we got big news on the acquisition. A blog post from a fellow by the name of Simon Segars, the CEO of ARM, about how it's very important for the United Kingdom to approve the deal, lest ARM fall behind in artificial intelligence. He mentions that the company contemplated raising money through an IPO, but, and I'm quoting here, determined that the pressure to deliver short-term revenue growth and profitability would suffocate our ability to invest, expand, move fast, and innovate. End quote. Thank heavens there's someone just willing to tell the truth here. Instead, by joining forces with Nvidia, ARM can make the United Kingdom into, quote, a meaningful player in the era of artificial intelligence. The British authorities are worried about letting an American company snap up one of the few tech heavyweights in their country. They don't mean to denigrate the UK, but they don't have a lot. But the authorities don't want Nvidia to move all the research to the U.S., But Segars argues that rather than siphoning off talent, this deal would actually increase resources in the UK. This is the biggest obstacle to the deal. So if he can get the British government on board, that is huge. Now, maybe some of you think of Nvidia as more of a cryptocurrency play because its graphic cards are used to mine Bitcoin and Ethereum. Everything else, mostly Ethereum. According to management, though, it's a tiny portion of their business. Well, it could be $400 million, according to some of the reports I've seen. It's mostly driven by chips that aren't up to specification for gaming. Yeah, scraps. That said, there's going to be analysts who think it's a kind of piece of the pie, and there's going to be lots of younger people who say, ooh, it's an Ethereum play. Please don't buy it for that, okay? Buy it because, well, the rest of the business. There's a reason CEO Jensen Huang is known as the Da Vinci of tech. He's a renaissance man with a ton of different priorities: gaming, high performance computing, customer service, pick and place robots, ones that go around and say, like, actually literally deliver you coffee, which I could use right now, fraud detection. But he seems to have the most interest in conquering self-driving cars, where NVIDIA is working with Mercedes to make it happen. Good partner. While truly autonomous vehicles seem to have taken a step backward, every time a self-driving car crashes, it crushes the entire industry. Never mind that humans don't exactly have a great track record when it comes to avoiding accidents. Still, if anyone can pull this off, Jensen can. And that's why I am proud to call Raghu NVIDIA. Now, remember, he answers to NVIDIA, but only if you have a piece of steak in your hand. Second biggest winner. You knew there had to be an energy stock in here. Devon Energy, up nearly 34% for the quarter. The company's run by this fellow, Rick Moncrief, okay? It's Muncrief, which is odd in itself because the new Devon is a combination of the old Devon with Moncrief's old business, the much smaller WPX. But anyone who knows him, and I got to meet him when we went to the Bakken Shale a decade ago, can understand both why he's running the joint and why the stock's such an outperformer. Rick understands that Wall Street is sick and tired of oil companies that spend beyond their means and are awful stewards of capital. Rather than chasing production growth, the oil patch is now about efficiently spending money and generating FCF, free cash flow. That's how you measure it. Even better, the new Devon has a variable dividend that gives you a huge yield when oil prices are high, like right now. As long as crude stays above $60 a barrel, we're talking about a 7% yield here. No wonder people like this one for the second half, too.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.